Look at this owl. Cute, right? Now, consider this owl's stock chart. Not so cute. Down 83% from its highs. Wall Street has completely written this thing off. And I think that is one of the biggest mistakes the market is making right now. Duolingo is not a broken company, it is a sleeping giant. And in this presentation, I'm going to show you exactly why. The revenue, the users, the valuation gap, and what the upside actually looks like when this thing eventually re-rates. Stay with me because by the end of this video, you're going to understand why some of the sharpest investors in the room are quietly building positions while everyone else is looking away. Okay, so here's the thing that broke my brain when I first dug into the Duolingo story. In 2025, Duolingo crossed $1 billion in revenue for the first time in company history. Net income up 367% year over year. Daily active users hit 52.7 million, an all-time record. By every single business metric, this company is firing, and yet the stock lost 83% from its peak. That is not a business problem, that is a sentiment problem. And sentiment problems, they correct. That gap between what a business actually is and what the market is pricing it at, that is where money gets made. The question isn't whether this company is broken, it's whether the market overreacted. And I think it did, massively. This is the slide that genuinely kept me up at night. Look at this table. Duolingo is growing revenue at 39% year over year. Salesforce grows at 8%, HubSpot at 16%. SaaS companies on average call it 15 to 20%. And they all trade at 40, 55, even 180 times earnings. Duolingo, 10.5 times. 10.5. That is not a growth company valuation. That's what you'd pay for a company that's slowly dying. But this company is not dying. It's actually compounding. 39% revenue growth at a 10 times PE is one of the most dislocated setups I've seen in this market. The only question is, why? Why is it this cheap? And I'll tell you, it's not because the business is broken, it's because Wall Street panicked when management made a long-term decision that hurt short-term numbers. Massive overreaction if you ask me. More on that in a second. Look at this chart. Back in 2022, 9.8 million daily active users. Now, 52.7 million. That is a 5 times increase in daily users in under 3 years. And before you say, okay, but growth is slowing, yes, the rate is decelerating, but 30% year over year growth on 52 million daily users is still an insane number. For context, paid subscribers hit 12.2 million, up 28%. Monthly actives at 133 million. And get this, their daily active users to monthly active users ratio, which basically measures how addictive the product is, sits at 36%. That's elite. That's Spotify level habit formation. Oh, and net income, $414 million on the year, up 367%. The stock fell while literally every meaningful metric went up significantly. Again, that is a golden sentiment gap, not a business gap. Here's where the story gets even more interesting, and this part most people completely miss. People still think Duolingo is a language app. It's not anymore. Chess launched on the platform in mid-2025, and within 1 quarter, it had 1 million daily active users. Today, it's at 7 million. And here's the even crazier part, that chess course was built by 2 people who had never written code and couldn't play chess. They built the entire curriculum using AI. That's the moat nobody's talking about. They can spin up a new learning vertical in months at almost no cost and plug it into 133 million monthly users who already trust and use the product. Music, math, chess, and whatever comes next. This is not just a language app anymore. This is a learning platform, and learning platforms compound differently than traditional apps. Now, let's step back for a second. How big is this market actually? Bank of America estimates the global e-learning market hits $400 billion by 2026. That's not niche. That's one of the largest addressable markets in consumer tech. Now, look at Duolingo's 2025 revenue, $1.04 billion. That's 0.26% of a $400 billion market. Not 26%, 0.26. The entire global user base of potential learners is roughly 2 billion people. Duolingo has 12.2 million paid subscribers. That means they've monetized, wait for it, less than 1% of their potential audience. I'm not saying they're going to capture the whole market. Nobody does, But even moving from 0.26% to 1% of a growing market is a radically different business than what the stock is currently pricing in. With Duolingo already being leaders in the e-learning space, they stand to gain more than anyone from the industry's projected growth. Here's a quick snapshot so we're all on the same page with the numbers. The stock is currently sitting around $90, market cap roughly $4.2 billion. And I want you to hold that number in your head, $4.2 billion. For when we get to the upside chart in a couple of slides, because the contrast is going to hit different. PE of 10.5 times, PS of 4.19 times, both sitting at multi-year lows. $87 to $545 is the 52-week range, which tells you just how violently this thing sold off. But here's what I want you to notice. $1.04 billion in revenue, $414 million in net income, the #1 education app on both the App Store and Google Play, and a $400 million share buyback authorized by the company. That buyback is important. It means the board believes the stock is cheap, and that's crucial because they have more information than we do. Okay, this is my favorite slide, and honestly, it's the reason I made this video. Look at where we are right now, $90, that short little black bar on the left. Now let's walk through the scenarios. Analyst consensus price target, $176. That alone is 96% upside from here. Our base case also around $175, essentially double. Bull case, if this thing re-rates to what comparable SaaS companies trade at, $280. That's a 211% return. And then, just for context, the 52-week high was $545. The stock traded there less than a year ago. That's 506% from here. And Morningstar's fair value estimate, $869. That bar literally runs off the chart. I'm not saying it goes to $869 tomorrow. I'm saying the range of outcomes here is extremely skewed to the upside, and the downside is backstopped by a $400 million buyback. That risk-reward setup is rare and the kind of investment I jump all over. Now let's talk about who's actually driving this thing. Luis von Ahn, co-founder, CEO, chairman. He's been at this since 2011. That's 14 years of purely founder-led growth. He's not a hired gun. He's not a Wall Street plant. He's the guy who built it from zero. Before Duolingo, he founded reCAPTCHA and sold it to Google. He holds roughly 10% economic ownership, and this is the important part, 52.7% of the voting power through the DUOL class share structure. That means no activist investor, no hedge fund, nobody can come in and force a short-term decision. He is building for decades and the structure protects that. Now, and I'll always be straight with you, there are some flags. He's been selling shares through a pre-planned program. The CFO resigned in early 2026, and there are class action lawsuits being investigated. I'm watching those closely, but his incentives and his control structure still aligned with long-term holders. Alright, now let's take a look at the bear case for a second, because I'm not here to hype stocks up, I'm here to give you the full picture. There are real risks. AI disruption is probably the biggest one. ChatGPT, Gemini, dedicated AI tutors, they could chip away at Duolingo's value prop over time. T-Mobile literally launched a competing AI language tool in February 2026, and the stock dropped 10% in a single day. That threat is real. Growth is also genuinely decelerating. 2026 booking guidance is around 11%, down from 33% last year. That's a big step down. And look, the CFO resignation, the class action lawsuits, the insider selling, I'm not going to pretend those aren't there. This is not a risk-free trade. What I'm saying is, given the price, those risks are already more than priced in, but you have to know what you own and be comfortable with the uncertainty. If you're not, this isn't for you. As for me, the potential rewards far exceed the risks with this stock. Here's where I land. Duolingo is trading at 10.5 times earnings on a business that grew revenue 39% last year, has 52 million people using it daily, is expanding into chess, math, and music, and has a $400 million buyback working in the background. That valuation is a historic mismatch, and historic mismatches eventually correct. This isn't a momentum trade, this is a patience trade. You're buying a fundamentally strong business at a fear-driven price and waiting for sentiment to catch up with reality. Base case, $175. Bull case, $280. And yeah, the downside has a floor underneath it. My conviction is bullish, with one condition. You have to be able to sit on this for 12 to 18 months without panicking. If you can do that, the risk reward here is legitimately compelling. Now, drop your price target in the comments. Are you buying, watching, or avoiding? And if you got value out of this, subscribe, because there are more of these on the way.